Hey, what's up guys, John here. A new law just passed 1 hour ago through the Biden-Harris administration, and this is the launch of a joint FTC, Federal Trade Commission, and Department of Justice task force to crack down on unfair and illegal pricing. They call this, according to The Hill, a strike force. According to MarketWatch, a strike force. According to Politico, a strike force. So you start to look at this. They're going to be going after companies that they say are charging prices that are too high.
Are you getting sick and tired of rising food costs?
The prices of groceries and food are still rising.
Prices are so much higher than they used to be.
Gone are the days that the prices are determined by a buyer and seller. Now they're going to be determined by the government. So we're going to start to see, I believe, one of the biggest changes in commerce that we've ever seen before. And it's happening right now. It's already signed into law. And at the same exact time that that's signed into law, a new law was signed that's going to be impacting credit card late fees, reducing late fees from $35 to $8.
The Biden administration, meanwhile, is cracking down on credit card fees.
This new rule under the Consumer Financial Protection Bureau would cap those late fees at $8.
Now, some people might say, hey, this is a really good thing, John. We need to reduce these late fees. These junk fees are excessive. What if I were to tell you that 15.68% of all credit card balances to subprime borrowers, which is, a large chunk of America, are behind? Not 30 days, 60 days, they're 90 days past due. So if you were a credit card company and your profit margin was reduced 75%, would you continue lending money to people that are not going to pay you back? Probably not, right? You would probably pull back on credit. What I think is going to happen is we're going to see massive changes unfolding through corporations and through small business in America, and a lot of changes coming to credit contraction. I think it's going to be a lot harder to get a loan very soon. In this video, I'm going to break it down. I'm going to show you the facts, show you exactly what's going on to help you and position you for what I believe is going to be the greatest wealth transfer in American history. I believe we're going to see millions of people soon lose their jobs. And without a job, how does one pay their mortgage? How do they pay their car loan? How do they, keep up with their bills? They're not going to be able to. They're going to be forced to sell. And that's what we're walking into now. Please hit the like button, YouTube will share the content, educate more people about what's going on in America's economy. And if you'd like to fix your credit to position yourself for this massive wealth transfer, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session for tomorrow, for Wednesday. Take a look at this. So this is crazy. Now this came out literally an hour ago. President Joe Biden on Tuesday will launch a new task force to take on unfair and illegal corporate pricing. Imagine that. Imagine your pricing, even if you're a corporation, a small business, where your price is illegal. Like you're not legally allowed to charge, right? Which Biden sees as a major reason why consumers are not yet feeling the impact of cooling inflation rates and a strong economy. Well, in many states, whether it be Texas, Alabama, Mississippi, a lot of states are seeing default rates on credit cards 25, 30%. They're seeing record high inflation. A strong economy could be, debatable, right? I personally think we're in a silent depression. I think when we look at 2007, 2008, the price of a home in America was $270,000, depending on your market. You could buy a used car for about $7,000, $8,000 back then. Now a used car is $35,000, depending on your state. So you start to look, and wages have yet barely moved, maybe 10, 12% since then. So you start to look at what's actually happened, where we are right now. We're in a really challenging spot, many would argue. The task force will be jointly led by the FTC and the Department of Justice, two agencies at the forefront of the Biden administration's aggressive regulatory agenda over the past 3 years. We're excited to be co-chairing the president's new strike force on unfair and illegal pricing, which builds on the FTC's far-reaching work to promote competition and tackle unlawful business practices that are inflating costs for Americans. Now, I would love to believe this, that this is going to bring down prices, but let's look at structurally what's actually happened with these corporations. Because when you look at diesel prices in 2020, $2.50 a gallon basically. Now it's $3.30. So diesel prices jumped, 25%, give or take. Hourly wages on a truck driver back then was about $22 an hour. Now it's about $27 an hour. There's another 20% increase. Then you have car insurance rates up at a 47-year high across the board. Rates are through the roof. and maintaining trucks is getting more and more expensive. From the third quarter to the fourth quarter, labor costs increased 5.4%. This is on truck repairs, up 2.7% compared to a year earlier. Combined parts and labor costs rose 10.8% year over year. Labor costs spiked 14.2%, while parts costs jumped 8.8% the fourth quarter of 2020. So rates have everything has just been going through the roof. At the same time, energy prices on their factories, their warehouses, this is up 39%. 39%. The insurance on the land on that industrial property is going up. The taxes have gone up. Everything has gotten more expensive. So how does that not get passed along to the consumer? There's no way. Just like a landlord, when a landlord has insurance, a premium going up, the property taxes going up, repair costs, what happens? They get pushed on the consumer. Everything that gets more expensive for the business owner soon gets more expensive for the consumer. So what I believe is going to happen, as they start to go after all of these companies, what I think is going to happen is these companies, these corporations are going to say, okay, well, how can we, stay in compliance? How can we bring down prices? They're going to be doing that by getting rid of the truck driver that's charging $27 an hour. They're going to start trying to move to autonomous vehicles down the road. Not now. I mean, some people, maybe some might see this in the next 2-3 years, but the next 5-10 years, we're going to start seeing this becoming more and more normalized. You look at Amazon's factories, they have 750,000 robots. 750,000 robots. That's a massive, massive move towards robotics over the last, 24 months. What is going to happen? These corporations are going to find ways in which they can automate as much of this as possible, as much as their supply chain as possible. At the same time, this is going to reduce their net income on their business, their profit margins, because they're going to be investing that profit that they were showing back into the actual business. So they're going to be able to reduce their overall tax base as taxes are, set to skyrocket. They're working on increasing the tax base right now from 21% corporate tax rate, 21% to 28%. So this is what I believe is going to happen. We're going to be walking into a wave of automation next couple of years and a wave of layoffs to likes which we've never seen. You think about some of these corporations, like what companies are showing most profit? Apple, Berkshire, Microsoft, right? These are some of the most profitable companies. If you do business with Microsoft, right now almost everything is done through a chatbot. Everything is automated. We're going to be moving into this world. Everything is going to be soon be automated. But then you ask yourself this big question. How can small businesses compete with a world of automation? How can small businesses compete as, because corporations can easily, even without the automation, can easily undercut small businesses. They have, way better, infrastructure to be able to go out there and look at Amazon. That's why a lot of people shop on Amazon. They save money compared to going to the, ABC, store down the street. It's going to cost you 10 or 20% more, and you're going to have to drive down there, spend money in gas. If Amazon and these large corporations are going to start getting regulated to bring their prices down, what does that mean for small business, right? What does that mean? It's going to mean big problems for small business. Now, one of the big turning points in America right now is credit and getting access to money. Because everything's so expensive, people need to get access to money. When you look at credit cards, for example, the average delinquency rate right now is about 8.5%. Average. But if you have bad credit, for example, let's say you have a credit score of, in the 500s, low 600s, the default rate for subprime is 15.68% in the third quarter last year. That's before, fourth quarter student loans are due. This number is definitely going up from them. 40% of people did not pay their student loans. So you imagine, use your imagination. Say that number is 16%, 17%, 18%. If the average credit card balance in America right now, according to CNBC, is $6,360, and you lent that $6,360 to 100 people, and 16 or 17 didn't pay you back at all, and the other 83 did. How does someone stay in business with that? As their junk fees or their late fees are now being basically eliminated. Like, look at this. This came out, an hour ago. Credit card late fees capped at $8 as the Biden crackdown on junk fees. Federal regulators finalized their rule on Tuesday to cap most credit card late fees at $8 as part of the broader push by the Biden administration to eliminate junk fees. The Consumer Financial Protection Bureau estimates the new regulation first proposed last summer will save families more than $10 billion a year by cutting fees from an average of $32. The new rule applies to large credit card issuers, those with more than 1 million accounts. These companies represent more than 95% of the total outstanding credit card debt. The new push to target credit card fees comes as the White House aims to show it's taking action to help families hurting from the high cost of living. The CFPB also proposed a rule in January that would curb excessive overdraft fees. It also comes as Americans continue to pile on credit card debt, which recently exceeded a record of $1.1 trillion. Some borrowers, especially millennials and those with lower incomes, have been falling behind on their credit card debt following more than 2 years of high inflation. More than 45 million people are charged late fees on credit cards each year, according to the CFPB. Those individuals will now save an average of $220 a year. Well, I would argue that they're not going to save anything. In fact, I'd argue that many of these people are going to have a harder time getting access to loans, getting access to credit, and finding someone that's going to actually want to do business with them. Because if you're lending someone money, and let's say you're lending them $6,360, and you're able, if they're late and they don't pay you back on time, you're only able to charge them 0.0012% as a penalty. Would you lend them that money? No, you probably would not lend them that money. Instead, you'd probably take that money and lend it to somebody that will likely definitely pay you back. Right? Someone with a top tier credit score, stable income, really high income, great job, you like the top tier borrower. You'd probably lend to that person. You'd probably lend to, someone that you think is going to pay you back, not to someone that is most likely not going to pay you back. So what I believe just happened today is we are going to see this strike force ramp up dramatically over 2024. I believe these credit card companies are going to really cut down immensely on credit. And I think when you look at what's happening with the BTFP program, the Bank Term Funding Program, getting pulled, which is the lifeblood of regional banks, in 5 days, 6 days, we're going to start to see across the board massive change coming to America. What do you think about this entire situation? Drop below. Let's have a conversation about this. What do you think the net impact of all of this will be for the U.S. economy? And if you'd like to fix your credit, we would love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Put yourself in the best position possible for funding in 2024 and 2025. I'll catch you next video.